Good afternoon, it's Carol Harmer again, and I'm just embracing what I said this morning really when I went on talking about the S&P. I mentioned the T-note market, and I'm going to show you how you can gauge where to put your entry and exit levels, and really before you do that, hone in on the price action and what these patterns tell you. So if I just flip over to the chart, and you can see here that you look at the T-notes, they've made a wonderful little head and shoulder pattern. Now, head and shoulder patterns are quite difficult to find because they can be a continuation pattern. But when you've had these treasury notes come from such high levels down, and they're basing on all the technical indicators, and then really you are on reversal watch. You're looking to find out where to go into this market. Where do you want to buy? So if you look at this here, just this line, I'm just going to eyeball it because I like just eyeballing lines. So I just eyeball that one there. Okay. Now, you can see that the market made the break above that trend line, or that neckline, went down, didn't get anywhere near this area here, and once we got back up it and cleared this little area of resistance, which was our old support area, up and away we went. Now, these are quite difficult patterns to trade, but if you can master just going in and looking for patterns, you can actually make good trading decisions. And you're not going to make them if you're looking at a 5-minute chart. You're going to make them more if you're looking at a little bit longer term chart. I do look at the hourly chart every now and again, but to be fair, it's pretty rare that I would do that. The way I trade strategically is the lower time frame that I would use, or did used to use, would be the 4-hourly chart. Okay, that gives you much more information than the daily chart, but not as much information as an hourly chart, which could be noisy. Anything lower than an hourly chart, you're scalping, and really it's not something you want to do if you want to make trading your career. The idea of the International Trading Institute is to make sure that you can go forward with your trading to a level where you can trade up until you die, really. I mean, it's looking like I'm going to, but I mean, it really is. It's something that can take you to wherever you want it to go. So here we have, I've put these Fibonacci's on here because that's where I think the market based. You could go to this one, but this one's better. Now, you can see that the retracement on the Fibonacci hit the 38.2, but you can also see all this level of resistance that acted as support on the way down. And that's what you have to remember, is it reverses. So whatever was resistance on the way up will be support on the way down. Now, if you look at this chart pattern here, this is a typical bull flag move. Okay, this is what it does. It makes a pole, it comes down, you can draw the parallel lines, and then you break out. You trade on the breakout. You can then leave your stops below. You're looking to maximize your profits and to minimize your losses. Now, the market has come down to the 38.2 area. We have not yet broken below the 9-day smooth moving average, which is coming in today at 11 11.26. 1:11.26. So there's what we're looking at, and we're also looking at this 1:1.20 area. That's going to be quite pivotal. I'll go into pivot points at a later stage. I don't think you could, handle those at the moment. This is interesting. This is where strategic traders, funds, whatever, people who are not scalping are looking for. You're looking for patterns. You're looking for history repeats itself. And this is how you can trade with a very limited downside risk. I mean, it really is, because when it hit this area, you knew that it was going to struggle as it closed lower. So then you're going back in and you're looking at, right, where do I want to be buying this? Well, you want to be buying it around this area because the market is well supported down there. Limited downside risk. And up we go again. So for today, I think the bond market or the note market is going to see more of a recovery. We could actually go back up to the 23.6 level, which is 11.12.21. So keep your eyes on that. I could, if I show you this one, okay, this is the yield of the TNotes, okay. So what happens is the market inverses or reverses. So when the yields go down, the futures market goes up, okay. So we're trying to keep this below the 200-day moving average, which is coming in around about 4.25% to 4.35%. That sort of area. You've got a lot of resistance there. So that's the area you'll be looking at bond yields today. I hope this has been helpful. I'm going to do some more videos tomorrow for you. We run our very first webinar for the International Trading Institute. We start at 3 p.m. European time, 2 p.m. UK time, and we all would love you to come along and give us some support, and let's start trading as professionals. You've got to have confidence. You've got to be confident, not cocky. Understand that fear and greed run a market. Understand that you are up against some pretty heavy hedge funds, pretty heavy corporate customers, interbank. You really are up against it. But there's absolutely no reason that you can't use the knowledge that you're going to get to be able to trade like them. You're not. The idea of this course is that you do not sit in front of a screen 18 hours a day. By nature, being a trader, you want to do that. That's just the way the market is, because you're frightened you're going to miss something. However, it's not productive. It gives you stress. It gets you out of your market and you lose your money. Okay? Our idea is that you don't have any of that. We know what you need to have to be able to go forward with this, and we're going to do our best with our team of mentors to do our very best to show you the pitfalls and prepare you for them and how to get out of them, because there's always a get out clause. Always. You can always get out in something if you know what to get out in. You can get out in, like, for example, stock markets go down, go into bond futures, that sort of thing. They're pretty standard, and they haven't changed in the 40 years that I've been doing it. Anyway, as I say, I'm going to do some more videos tomorrow, mainly on the currencies and also the dollar index, because I think if you're trading the euro, you need to watch the dollar index because it's weighted far more against the euro than any other currency. Okay? Well, good luck for this afternoon. I'm off to sit in the sun, and I will see you all tomorrow and hopefully give you some more trading ideas, show you what I'm looking at. We're going to pivot points at another stage, show you what I'm looking at, and get you to apply the knowledge that I have to your own trading skills. Okay? Have a great afternoon.